Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:35 a.m. Central Time, and I'm recording this in preparation for market day, May the 5th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive right in and see what is going on with our overnight action. Well, just a little bit of weakness. All four of the broad market indices are down, but just only marginally down as of the time of this cut. Perhaps the Russell the weakest, and certainly that's in line with what we have seen in Russell activity of late, followed closely by the NASDAQ, and then the S&P and Dow just a few ticks down. You have crude oil up almost 1% today, then Euro marginally down, bonds scratch, and gold at scratch. So not too much going on in any of these markets in the overnight, with the exception of crude oil. China down 1.31%, Hong Kong essentially scratched, Japan up about 0.5%, Germany down 2.89%, and United Kingdom essentially no change as a reflection of their bank holiday. Then we have in our macroeconomic reports, let's see here, for the U.S. today, we have trade balance before the market opens. After the market opens, you have ISM non-manufacturing PMI. So nothing terribly exciting there. Those are both red flag reports, but not generally something that's going to entirely change the day. Tomorrow, we have Fed Chair Yellen speaking, so that could always have something to roil the markets. You also have FOMC member Lockhart speaking. Both of these are occurring during the market hours, so kind of be aware of that. ADP non-farm employment change before the market opens. So there could be some action in affecting the markets during the day tomorrow. And then in terms of market conditions, from a volatility standpoint, we continue to have very low volatility. And you see the short-term VIX is now at 12. In fact, the regular VIX is in the 12 handle as well. Historical IV percentiles, 19, 25, 24, 24, all in the bottom 25 percentiles. Standard deviation moves yesterday, there were none. So after the little burst of activity in Thursday-Friday combination of last week, back to a relatively quiet day yesterday, we had some initial thrust in the early morning activity, and then basically just went sideways for the day. In terms of our regular daily report, the intermediate term phase opinion is still phase 3, higher highs, higher lows, but we have the flies in the ointment that have been present so much in recent trading days. IBD status uptrend under pressure. GMI index is only a 3 out of 6. However, active trader market posture did turn bullish yesterday, so note it is bullish. It is in the upper above the 50 area, but at the same time, it's first day bullish, and not all four indices agreed. You still have the NASDAQ and the Russell as bearish in their market posture, and in fact, the Russell is very bearish. So it's pretty mixed signal there, and I wouldn't put too much into a first day bullish forecast, while technically the signal says that new short-term and intermediate-term trades, bullish trades, are okay. You've got a lot of mixed signals here, so really I would take this as a neutral stance as at this moment. Hedge warning status is still level 1, or yellow light. We have primarily in addition to the IBD status of uptrend under pressure, the number of distribution day count still remaining quite high with 6 on both the S&P and the NASDAQ, and really nothing else to get too excited about. We have that crash warning indicator that fired some time ago on the E-mini charts. Our regular opinions for option income strategies: we are inside the acceptable window, and consider the potential for increasing volatility though, but it is okay to do option income strategies in the current environment. I've got a number on. I know I had a couple of them actually hit their profit targets yesterday, so there is opportunity in a range-bound market to have option income strategies work for you very nicely. Just always consider this potential for increased volatility, and your strategies need to be weatherproofed for increasing vega. Covered call strategies still relatively conservative, slightly bullish with a 1-to-1 distribution between in the money and out of the money strikes. Put selling, certainly an opportunity to sell puts when the opportunities present themselves against your core portfolio basket of stocks in the position size that you're willing to own. You also have, from our sector market postures, a lot more green here today. Again, we've been so neutral, so range bound, these things tend to go back and forth without actually having gone very far. But certainly a number of sectors did improve their posture yesterday, and that certainly is quite welcome. Perhaps to note, telecom and retail are both perhaps faring the worst. Percent change yesterday, it was a generally positive day. Financials up almost 1%, utilities up about 0.75%. And then information technology essentially scratch, and energy materials negative on the day. In terms of industry groups, focus on retail, internet, healthcare, railroads, and transportation as perhaps the most consistent groups in the intermediate term, and yet at the same time we have seen that some of these in the short term have started to struggle, such as retail, so be aware of that as you work up your watch list. Okay, well, as always, if you're finding value here, we greatly appreciate you're following us, you're liking us on YouTube and the other social media platforms where you're interacting with us, and of course feedback through the Facebook page is always welcome. We do, of course, if you want additional information about what else we do apply all of these tools and techniques in our portfolio and options trading chat room. There's more information available on the website, but at the heart of it, it's a coordinated investing focus using equities, ETFs, and options in a dynamically hedged portfolio. We have a number of strategies, including an IBD Top 50 ETF strategy, an SPX mortgage strategy. It's an option income strategy that we look to pay for the mortgage with a regular option income stream. Other information available on the website. We're all very transparent, and you'll have complete understanding as to what's going on with each modeled trade each day and what that position is. More information, as I said, available on the website, falconglobaltraders.com, including information about free trials. Disclaimers, as always, hit the pause button if you need more time to review this. And as always, we greatly appreciate you each and every trading day in the Falcon Global Trading community.